On this video, I'm going to talk all about the closing disclosure, or CD, which is your mortgage settlement statement, and we're getting started right now. Hey, what's going on? I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie, and welcome to another video. On this channel, we'll talk more about mortgages, the home buying process, and some cool things around Port Saint Lucie and the Treasure Coast. So if you're new here, please think about subscribing. Okay, the closing disclosure. Okay, we finally made it to the end, made it through underwriting, you're clear to close, and we're about ready to close on your new home or your refinance. Now, what is the closing disclosure? And again, this is the twin to the loan estimate. And if you haven't watched the loan estimate video, you kind of go back and watch that. It's a twin to the loan estimate, which compares to what was disclosed on the loan estimate versus what is at the end. And usually, and it should be, that the closing disclosure fees are lower than what was disclosed, because I always over disclose on the loan estimate initially. Now, what the closing disclosure is the settlement statement that you're going to sign at closing. You might have gotten an initial one electronically, which starts your 3-day wait, and I'm going to go into that in a minute. Now, the CD was part of the TILA RESPA Ingegrated Disclosures that were changed in 2010. Now, one of the things that they changed was they eliminated the HUD-1. Just like the loan estimate eliminated the good faith estimate and the truth in lending, you combined them, whereas the HUD-1 is now the closing disclosure, or CD. Okay, so the CD is going to have your settlement charges, what the final numbers are, whereas your estimate had the estimated numbers are. And one of the pages that are on there is the comparison between the LE. And I'm going to go into a deep dive into the CD in a minute, but I wanted to point out some things. Number one is the 3-day wait. The CFPB calls it the consummation, so that's their words, not mine. So you have to wait 3 days before you consummate your mortgage. So I'm going to give you an example. If you want to close on a Friday, you got to have it done by Tuesday. So it's basically that 3-day wait. So if you sign your CD on Monday, then you can close Thursday, and so on and so forth. And Saturdays do count. So it's very important when you're planning your closing, especially if you're selling your house and buying something else, you got to really sign your CD as fast as you can. And usually for all of the lenders that I broker to, they'll let you sign your CD early before a clear to close, so it's really not that issue. So what I'm going to do now is go into a detailed closing disclosure. Here we go. Okay, and here is the simple closing disclosure, and that's just a simple loan estimate that I had in my loan estimate video. Again, this is a fictitious loan. It's not real client information. So basically here is the closing disclosure. This forms a statement of the final loan terms and closing costs, and compare this document with your loan estimate. Here's the pertinent information: closing date and disbursement date. Now, on a purchase in Florida, we're a wet funding state. We usually fund on the same day that we sign paperwork, but sometimes, like, you'll sign one day and then you'll fund the next day, depending on where the sellers and buyers are. But as I'll tell you, the closing date's when the paperwork is signed. Disbursement date is when it funds. Who the settlement agent is, the file number that they've associated, the property, the sale price, etc. Who you are, the borrower, who's the seller, who's the actual lender. Again, loan terms, 30, 20, 15, whatever they might be, purchase, fixed rate, etc. FHA, conventional, VA, or other, the loan ID from the lender, and the MIC number. Again, that's from the MERS, the Mortgage Electronic Registration System. That's the MIC number. Okay, and again, kind of matches the loan estimate. Here's your loan amount. Can this amount increase after closing? Interest rate, principal, and interest. Now, and ask that question: if it's an adjustable rate, that answer will be yes. If it can increase loan amount, if it's a now, as far as things that use a closing disclosure, there's very few negative amortizing loan. But again, if there is out there, eventually, if they come back in the market, that question will be yes. At least you'll be in plain language, yes or no. Will it increase? Yes or no. This loan, again, has a prepayment penalty. Most FHA and conventional loans don't have one, but this one, for an example, does have one. I guess it's just so you look at this column and don't overlook it and say, yep, yes, one is a yes. Why is it yes? And here's what it looks like. And then balloon, no. Projected payments, again, this is a mortgage insurance fall-off scenario. So, years 1 through 7, it's projected to have it, and it falls off. You can see what your payments will drop to once it falls off. Here's your escrows, and again, escrows are not controlled by the mortgage company, so you can take a look at those. Again, here's your closing cost and cash to close. And now this is the closing cost details, and the sections match up to the closing disclosure. Section A, origination, that's from us as the broker, and then the mortgage company have control over your points, application, underwriting fee, things here like your appraisal, what it ended up being, paid by others, usually you paid outside of closing, your credit report. And again, these are the final fees on the loan estimate, usually over disclosed, and then on the CD they'll come down. Services shop for, basically your title fees, everything like that. And again, it's all just listed, one by one, so you can see them, and then they add up into D. A plus B plus C. These are total closing costs for borrower paid. Your other costs, like your recording fees, your transfer taxes, who pays what. Now, this over here that you didn't see on the LE is a seller paid, and so you can see what seller did pay. And in Florida, they usually pay the deed stamps and the owner's title. And again, now things that we don't know usually in the other, especially HOAs, like HOAs, however, if they're quarterly or sometimes annually or monthly, so you have to kind of settle up, because the seller isn't responsible for the whole year, only for what they have. So you can see that they, so you have to pay your first month of HOA to get current, whatever your home inspection fee. I guess you had to get one on this loan, and then it shows what the real estate commissions are, and then your title insurance that you paid for. I want to show you this here, the calculating cash to close. It talks about the loan estimate, the last one that was shown to you, and you were scheduled to do 16 cash to close, and ended up being a little bit better at 14 cash to close. So that's kind of what you can compare. Now this is the summary. Credit from the seller, about the $80 paid by seller advance, because they paid the first 15 days of that month, so they got to pay it back. You got to credit the seller back, and usually you'll see what's called tax prorations. That's big in Florida, because your escrows will have the full amount due for taxes, but you'll get the credit from the seller for the amount of time that they own the house. So a lot of times the loan estimate cash to close can be a lot higher, because it doesn't have those prorations, as well as the aggregate adjustment for your for that. So there's that. So, and then down here you have whether it's assumable, demand feature. It all matches the loan estimate, negative amortization. No, do not have negative amortization. Partial payments. No, you cannot make partial payments. And this is a throwback to the truth in lending. Again, they're all combined as part of trade. Escrow account. For now, we'll have an escrow account. It tells you what your property costs over, the 1 year initial payment to the escrow, and then your monthly escrow payment. And then if you waived escrow, that box will be checked. So that's in here. Here's your total of payments. Again, that's a throwback to the truth in lending. Your finance charges, your APR, your final APR compared to what you're disclosed. And here's a list of all the contact information, for the broker. I'm a mortgage broker, so my information will be here. And then, the real estate for the buyer, the seller, the settlement agent, and the lender that we chose. So, and then, again, this is where you would sign. Most of the time you e-sign a couple of days before closing. Now, on a lot of what we do, like you'll sign an initial CD that will be about 99% correct, the cash to close, before it's what we call balanced with title company. And then again, that's to start your 3-day wait that we talked about previously in the video. So you can back up if you have any questions about that. But so you need to have 3 days before the consummation of your mortgage. So just quick rule of thumb: if you want to close on a Friday, you got to have it signed by a Tuesday. So usually I take care of that 3-day wait even before we're clear to close. But you'll get your initial CD, and then you'll get the final CD, so you know how much cash at the wire, how much cash you're getting, etc. So that's it in a nutshell. And here we go. Okay, and welcome back. Hope that was an informative look at the closing disclosure. Congratulations on your new home loan. Hopefully I was the one who done it for you. But if you have any different questions about the other CD, the other disclosures, definitely give me a call. Go to DempseyMortgage.com. Thank you so much for watching, and I'll see you on the next one.